Welcome back to Money Discourse. Today's going to be a short one to see if you guys prefer this type of episode. But yeah, we're at the back end of earnings and we had a big CPI read. Rajan, what's interesting you right now?
We had the CPI today. And again, I think now, especially the US readings, coming less of a huge market moving event. We're having this consistent trend where the headline CPI is coming in slightly below estimates. So we had a point, I think it reached 3.3 or 3.2% for the headline. The core was about 4, like 1/10 under expectations. The month-on-month was in line. So that was enough to give us a little pop-up in the morning. But just as if those who follow the Money Discourse Twitter page, and if you don't, give it a follow. I did say that I don't think this is going to really last. I mean, the number wasn't anything fantastic, and it wasn't enough to really change probably what the Fed is thinking. So I did think that there was going to be a fade on the back of it. And now looking at this, we've seen the S&P, which was at one point up about 50 points, now just dip into negative territory. We got the Russell down about 0.5%, and Nasdaq just above the unchanged mark. So as we're coming towards the close, we're seeing all the sellers come back again. And it's just been a general theme, really, after we hit that high and we hit above 4,600, on the AI hype. And as that AI hype has sort of subsided and we're starting to see big pullbacks from all of these names, especially the non-big caps that really benefit from this AI move, they're all starting to subside a bit, just like we thought they would. You're seeing the market in general just coming up a bit as well. So now we're seeing the S&P below 4,500. So, I mean, not a massive correction, about 3% off the highs. We've seen the Nasdaq just above 1,500 as some of these big cap names that we had during earnings. It was a bit of a mixed bag, really, in terms of the mixed cap space. We had Microsoft and Apple, which actually came off. We had Amazon with a real strong print. And then obviously Meta smashed it out the park too. So it was, in terms of the big caps, the major four anyway, that was what we saw. Oh yeah, and Google was pretty good as well. They had a good reaction. Tesla, they were just so pumped up into the move that naturally the earnings came in line and nothing to really talk home about. So then we're now in the 240s in Tesla, considering we were in the 290s prior to it. So that's about almost a 20% drop in Tesla from the high. So it's been very interesting. But talking about earnings, the ones that really interested me, I mean, we had SOFI, and I've always talked about SOFI, and we had that huge move up about 20%, went into the mid $11. And then, as usual, after every SOFI earnings, we just sort of come off. And now we're like, high 8s again, which is just annoying. And I did sell off a bit when we did go into the high 11s, mid 11s, but, obviously, it's come back off again. So here we go. Time to reload again, I guess, if we get back in the 7s. But it was overall a pretty good report. But I guess this is just the market right now. And it did more than double from the low. So you could expect some profit taking.
Yeah, exactly. And around this figure is where there's normally some kind of support anyway. So if you wanted to dip your toes in, it's not really a bad, get into the 7s maybe.
Yeah, no, that's what I'm saying. I mean, you're looking at a lot of these moves. Microsoft now back in the, let me have a look at what Microsoft's doing. I think it's back in the 320s, having hit around the 350s. 322. Nvidia, where is that? Yeah, that's back at 424. That actually hit around 460 as well. So we're seeing some big pullbacks, and obviously Apple was a notable one where, again, I mean, they had very tepid growth, but yet the company is worth $3 trillion. And of course, it's got a huge moat, a huge client base, and it's a very sticky client base. But should a company be valued as highly as it is when it's literally flatlining? Ask IBM about flatlining, So, I mean, Apple went from 195, 196, and it's now just below 180. So again, I mean, it's still a pretty lofty level if you ask me. And I think, it's 178 now. And I think realistically, based on that number and the guidance that they gave for next quarter, where they basically said that the performance for Q4 is going to be similar to how Q3 growth was year on year. So in terms of the implied growth, I think that sort of is slightly below what the expectations were. So that, again, it's nothing great. Their phones, again, just like every other phone, it's not just them, it's anyone. Just nothing to really write home about. Samsung obviously released a new Flip 5 and a Fold 5, and yeah, they're probably nice phones, but if you have a 4, it's not really of a massive incentive to go to the 5, and it's the same with these Apple phones. And you're looking at, so my wife just got the new phone, and now all of these, to be honest, I've never really got one on a contract before. We always bought them outright, whichever phone we got, but now they're locking you into 3-year contracts. And I'll be honest with you, I don't think it's going to be too long until they lock you into a 4-year contract until you get the free phone. Everyone wants a free phone, right? But to get that, you've got to lock yourself into a 3-year or 4-year contract. So that replenishment cycle is just taking longer and longer, which is hampering these earnings.
Yeah, and the thing is, what's the big change? The only things I really see that are going to kind of move the needle slightly is that you have more kind of neural engine AI engines on the silicon itself to do on device AI processing. Once the operating systems get there and you have these kind of AI assistants and all of that, I think that'll be the next kind of push onto these devices, because I'm sure they're going to tie the software to some kind of new hardware to make sure that your battery doesn't go dead every few seconds. But otherwise, yeah, we're just in this kind of stagnation on the phones with very iterative updates. But one thing I found interesting is just how much stock Apple has bought back. Looking at this graph, you see that they bought back 588 billion dollars of stock in the last 10 years. That's like greater than the market cap of basically only 8 companies in S&P.
I mean, if you look at it,
yeah.
that is the avenue in which most of these people are raising their EPS. It's like shrinking the share base, and then it just gives this implied thing that EPS is growing year on year when really just less shares. Again, I mean, this is just a common theme along a lot of these tech stocks, because I mean, you've got so much cash, and what they're doing, they're just buying back stock, right?
Yeah, exactly. Yeah.
It's
so what else is
interesting.
interesting?
I mean, to be honest, looking at all these earnings, to be honest, this quarter, if I had to generalize it, there wasn't really any massive surprises. We had a few big movers, like we already mentioned, but like what I did find interesting, and I guess I'll just talk a little bit about today, was the ride-hailing companies, Uber and Lyft, and how differing their fortunes are. I mean, so Uber, again, they reported pretty strong results. And if we actually look at their results right now, they reported a positive EPS. I mean, how many quarters did we have of no money? It was like Spotify before, right? But I mean, now
take a look at this.
Yeah,
this is literally they've lost 31.5 billion in basically operating losses since 2014.
So we finally seen that inflection point. Yeah.
But it's kind of like how Amazon did it as well. Massive losses, and then
that's it. So I mean, in the quarter we had 18 cents, which was the market was expecting a slight loss. It was 18 cents. Revenue was a bit shy. The EBITDA was quite strong. They generated over 900 million in EBITDA, and their guidance was really strong for EBITDA for next quarter, and the gross bookings was pretty much in line. So in general, like I would say that Uber earnings were pretty strong. But the problem is it was such an overcrowded trade. I mean, everyone was long Uber. It was one of the best performers. It's been recently one of the best performers. And so we actually had a sell-off, as you would expect. I think the stock went down about 5% on the day. And yeah, pretty much. But overall, the growth story is still there, and I think there's a lot of upside for growth in general for Uber. And I was looking at what the analysts were saying at the end of it, and in general, most were pretty upbeat on it, and they were pretty much applauding the booking strength, the core booking strength, the margin expansion, and the success of Uber One. But the thing is that the freight revenue, that was a bit where they were saying, it's in general freight. If you saw UPS's earnings the other day, they cut their revenue outlook by 4 billion. So freight, and although UPS have got its own headwinds with Teamsters contract and loss of volume because of that, but in general, the whole packaging industry, the freight industry is facing headwinds. So that was one of the things. But in general, Uber was pretty good. They have a monopoly now in the ride sharing business, not the ride hailing, the ride sharing, since Lyft pulled out of it. So if you wanted to basically share an Uber, Uber's the only person that does it, only company that does it. So they have now apparently, what was the stat? I think it was a huge amount of in New York. There's I don't know how many over 100,000 ride sharing call outs in New York City, and of which Uber pretty much has a monopoly over the whole thing. So, I mean, you've got all of that that's really going in their favor. And so Uber in general, I think is going to be a pretty strong one. And if I'm just looking at where Uber actually is trading right now, I think it's pretty strong still. It's trading at, 45. So if we look at it over 5 years, I mean, it's pretty steady. But over the past month, it's up about 3%. This year is up 36%. So, I mean, it's had a huge move up this year, in the past year, basically. And it's just, the high was just below 50. So it's only about 10% off the high. So it's not bad. But then if we now compare that to Lyft, I mean, in general, if you look at their numbers on the top, it was not bad, to be honest with you. They had revenue which was in line. They actually made positive EBITDA as well. They made 41 million. That was above the 28 million. And obviously, they're still making a net loss, not like Uber. But in general, they had strong guidance. They expect their third quarter adjusted EBITDA to rise to a midpoint of 80 million, which was well above the 50 million expected. And their revenue is also above expectation. But their fourth quarter, I mean, this is the thing that's really hampering Lyft, is these insurance for third-party renewals. So the last time the stock got massively hit was at the end of last year, where their insurance premiums for their third-party drivers went up 45%. And so now in the fourth quarter this year, they're basically having to renew it again. But this time the premiums are going up 17%. So the trajectory of the increase has obviously come down a lot, but in terms of gross dollar value is still quite up there. And then they're saying that's going to impact their margins. So the real question with Lyft actually fell about 10% yesterday. And the real question that they have is, how can they mitigate these huge insurance rises, and what's the best way they can do it? I mean, like Uber seems to be managing it quite well. And how can Lyft do it, considering that they're much smaller and they just don't have the international footprint, obviously, that Uber does and stuff like that. So, but they are showing, to be honest, I use Lyft all the time because they're just much cheaper than Uber in New Jersey. But Lyft don't have a presence as well in the rest of America to the same extent as it does in New Jersey. And so, so I don't know how they're going to do it. But to be honest, at $10 or whatever it is right now, I think is a good play based on what the numbers they had. And the thing is that at least they put it all out on the table with the insurance. I think the only way really is a positive upside if they get more traction going. So I think Lyft actually is, I'm not talking it like a long-term hold, but from here for a nice 20, 25, 30%. I've actually been looking for a trade to do on the Money Discourse portfolio, but it's pretty difficult to get anything meaningful out of it. But I'm on the lookout, and so we'll see what happens. But
what I liked about Lyft is the way that they're trying to use advertising. The management now is pushing ads while riders actually waiting for the drivers to arrive, and also they're planning to put video ads as well in there. So obviously they can monetize that time quite. I guess it's free money for them, really. Why not?
You think about why they haven't done this before.
Yeah.
No, I mean, it was interesting because that was one of the notable things, because they're saying that their ad revenue grew 4x from the prior year. But the thing is that it's still more in an experimental phase right now. But clearly, it's a big opportunity for them in terms of just extra revenue, So
you're looking at you times the amount of rides that you've got, the amount of people that are waiting around for a driver, and looking at their screens. I mean, it's literally just incremental revenue going straight to top and bottom lines pretty much, because I don't see much R&D needed for this.
I mean, the initial trials, what they're saying, like listening to calling that it's in trial phase, but we've seen a fourfold increase, like I just mentioned. I think it's a great opportunity. And the thing is that given what the stock is priced at relative to Uber, obviously Uber's on another level compared to Lyft, but I think Lyft is a dark horse play in an environment where a lot of these stocks are still at very lofty levels. When you look at Lyft, it's one of the ones that are actually the opposite. And the other one I want to talk to you, just because your daughters use it a lot, all the kids use it a lot, and that's Roblox. That went down another 20%, and it actually went below $30 yesterday before just being above $30. And to be honest, I think it was a pretty terrible report all over, but it's still Roblox. It still has a strong user base generally. And they're reading in the report, they're saying the over 13 cohort is now actually 5 times larger than the under 13 cohort. And it's the over 13s that are the ones that spend all the money, right? They're the ones that can really be monetized more than actual kids. So that's some type of potential runway for future growth going ahead and increased. But I mean, what do you think of? I mean, based on, let's just say, your kids' usage of it, are they using it any less? What do you think the overall environment is with Roblox, considering where it is? Could be a play as well, I think.
Yeah, the thing is that I'm actually so surprised with how well they managed to retain their users. Meaning, I can only look anecdotally, but there's just incredible pull for this younger generation to carry on socializing via Roblox. It's my kids are always using it, talking to their friends and cousins via Roblox. That's the way they communicate. They don't FaceTime, they use Roblox. And my kids are still pestering me to buy Robux for them. So we'll see. I mean, maybe still not in value territory yet, but it's obviously hell of a lot better at 30 than it was at 40, or when it was at 70, this time
that's exactly right? So, that's exactly the sentiment by basically Wall Street, where the valuation is a pretty lofty valuation, and with a 20% drop, it doesn't hurt the thesis now. Like I said, if you liked it at 40, you've got to love it at 30, and And so, I mean, I think Roblox was definitely interesting, and I mentioned it just because it came out yesterday. But lastly, just wanted to talk quickly about the EVs. We obviously know what about Tesla. Rivian was pretty impressive. As in, like, you can see if anyone's got a chance of making it, I think Rivian's one of them. But then you saw Lucid, and Lucid. It was funny. I saw this tweet where, I mean, so Lucid this quarter did 150 million in revenue, but in their slide deck when they IPO'd, their revenue forecast for this year was 5.5 billion. It just shows that these slide decks that come out on the IPO for these companies, which are so hyped to it, clearly, I mean, there's one thing saying, oh, we're going to go from 10 million to 100 million to 20 billion. It's all good saying it, but actually delivering on that is something else, you know.
Yeah, it's still minuscule compared to Tesla. They're always talking about Tesla killers, etc. But the thing is, Rivian still has their kind of niche. But, you know, buying at Rivian is still an amazing proposition in terms of your value for money. Everything you get in that package, obviously, is costing them a ton of money. In terms of the actual stock price, Rajan, do you remember when it IPO'd, you had allocation potentially to buy it at, I think it was a 70, and then it popped to like 75, and then it popped to like almost 130, and you're like, oh man, and now it's 22.
The funniest thing is that, you know, I was so annoyed because I didn't get the allocation and it went to 130, but what I did, I ended up shorting that, right? And made a little bit, but always in hindsight, if I held that short, that would have been the best trade of my life, right? But but it's not just that; it was all of them.
Anything in November 2021, right?
I don't know if I've spoken about it in the pod, but I was long CCIV, which was a SPAC for Lucid at 10, and then it IPO'd and went to 60, and then luckily I got out most of it at 60. And to be honest, one thing I think I've been good at doing in this last few months is trying to learn my lessons from when I've had these bag holders. Like one of them was Upstart, and you know I've had Upstart and it was at 12.13 and it had that crazy move all the way to 61, and I just didn't get caught in that. Pretty much I sold out everything, you know, all the way up basically 30s, 40s, 50s, 60s. So I was out with that, and I did the same thing with Lucid and a lot of these companies that, you know, I've been bag holding. I've taken an opportunity to get out because if it goes high, so be it. But you know, that's been what I want to do.
Just one thing about Rivian, looking at the current burn rate, it's still not looking great. You know, they have 6 quarters left, burning 1.6 billion per quarter. So we'll see what happens. It's obviously still concerning that Amazon isn't buying their delivery trucks exclusively from Rivian. So, but you know, actually looking at their delivery truck that Rivian made, it looks amazing, right? So yeah, well,
no, we see them everywhere. They're absolutely everywhere, and I like the fact that it's got small wheels as the efficiency, clearly. But before we end, I just want to quickly just do a quick plug to the Money Discourse Twitter page. Loads of good stuff on there. You know, you can obviously keep up with the trades. If we're going to be, you know, you'll obviously see the pod. It'll come up on Twitter as well. You know, on the days where there's a decent amount of earnings, I try to do a earnings summary, like for example this one, Roblox was down 9%. Celsius, that I did not talk about that, but that is actually a stock that I own, which has actually smashed it. They, you know, obviously they got the partnership with Pepsi. Toast not bad, but anyway, you know, you can just see nice summaries here, and whenever I got time, try to do you know, try to do some updates on, you know, some notable names and everything like that. So feel free to follow. You know, we're at 69 inappropriately, so we need to get that above that. So you can someone make it to 70, please. So that'd be great.
Yeah, and sure. Now, the last thing before we go, Raj, just give your quick 2 cents on the CPI today and oil being up 20% since you know, June, and nat gas.
Yeah, I mean, you know, the funniest thing is nat gas. First of all, CPI is going lower, although on the food aspect of it, I'm just definitely not seeing it. But remember what I said to you before: CPI is year-on-year growth, so the prices are not coming down in real terms. All it means is that the rate of growth has slowed down. So we've had our 10% inflation last year, and now on top of that, we're 3% above that. So that's what it means. So naturally, CPI was always going to slow down. You can't get sustained 10% growth after last year's 10% growth. But the thing is that because there isn't a external catalyst for this oil price move, so now Russia warring on the news and this and that, it just, people are just taking it with the ebb and flow of what normally happens in you know, oil prices go down, oil prices go up. But when there's some government you know, when the government intervened and with this war in Ukraine and all of this, and we had these huge oil price gains because of that, that's when people get vexed, because there's a narrative that you can attach to it. But I think this oil price gain 20% is just general market market movement. And so because it's not in the news, no one's really talking about it. So it is what it is. But I'm electric anyway, so it doesn't matter. So
What about that,
but it's
guys?
in the threes. We're not in the fives. We're not seeing this. We're seeing. I think what it is that went 310, 320, 325, 330, which is just more normal behavior rather than 3 to 4 to 5, which was just crazy, and it's a sticker shock of above 3 numbers. So overall, I think, like I just mentioned at the beginning, the narrative around CPI is starting to dwindle a little bit as everything's sort of settled down. But it doesn't mean that these prices ain't high still.
Yeah. All right. So thanks. We were supposed to keep it short. It's already another 20+ minute episode. But we can't help but just natter on about everything. But yeah, please like and subscribe. Please leave us a comment. Tell us, do you want a really short episode? Do you want bite-sized chunks? What do you want from us? We'll be happy to oblige. But yeah, thanks a lot, and we'll see you guys in the next one.